Hello, everyone, and welcome to another episode of the Financial Advisors Want to Know podcast. I'm Catherine Tindall, one of the CPAs here at Dominion, a specialty tax and accounting firm specifically for advisors and their tax planning needs. But on today's episode, we're going to be talking data, and I have with me Erica Pauly. She is the founder of Track That Advisor, a data storytelling company that is passionate about educating advisors and business owners on the importance of getting clean data, which I'm a fan of that myself. Great reporting and comprehensive understanding of how it all works, how it all clicks together. So thanks for coming on the show today, Erica. I appreciate you taking the time.
Thanks for having me. I'm excited to get into the weeds.
I know we're both data dorks on different sides of things, since I'm on the financial and you're on the ops and performance and all that, those kind of slightly overlapped but slightly different emphasis. So I think we'll have a lot of fun today,
Likewise.
going through different things we see in people's practices. So I think, to tee it off, a really great place for us to start is just talking about what, based on your experiences and your team's experiences working with advisors, what are the top 5 things you think advisors should be tracking?
Yeah. Um, I got into the industry not to lead people or tell them what to do. And very quickly I realized no one knew what to track and that there was
Yeah.
no benchmark. There's no standard on what people should be looking at. So I
Hmm.
do use this as a loose guideline, right? The more
Yeah.
often you do it and the more into your tracking you get, it builds. But I do think it's important for advisors to strive to start with 5 things. So we call it the
Hmm.
TTA top 5. The first one is stick rate. So when I say that, I'm talking about out of the number of people who book a first meeting, what percentage are keeping it? So, some offices have a big issue with rescheduling. We can start
Mm.
looking at that, but a lot of people just have major fall off and they don't know that until they start looking at it. So stick rate is number one. We have
Yeah.
a benchmark for that. That should be about 70%. So 70% of the
Okay.
first meetings should be keeping it. So that's the first one. The second one is close rate. There's 1,000 ways to measure close rate. We just keep it pretty standard. I mean, we have 3 different ways we show our clients, but just the bare bones for the top 5 is out of the number of people who keep a first meeting, what percent of those end up becoming a client at some point during the year?
Hmm.
Pretty
Yep.
easy. Benchmark there should be about a 30%. If you're dealing with more referrals, obviously that's going to be higher. If you're dealing with more
Hmm.
digitally captured leads, it's going to be lower. So there's a
Yep.
range there, but 30 is the benchmark. Number 3 would be average case size. So what is the average household case size that you are writing? This is massive for reverse engineer planning if you're trying to grow your practice. Also just knowing your niche, like who your avatar clients, who you're wanting to work with.
Yeah.
If you're dealing with higher average case sizes, it takes longer to get business through versus more transactional people. So that's a huge one. We don't have a benchmark
Hmm.
on that. Um, that significantly rose in 2024. So we do huge aggregate studies, and every year I kind of see what happened, and the average case size launched by $100,000 last year. It was crazy.
Whoa, that's a big jump in
Cost
1
per
year.
client is number 4. So acquisition cost. What is it costing
Hmm.
you to get a new client? And then kind of a subset of that would be cost per set appointment. So how much are we spending to get someone just in the door or on the
Yep.
calendar? And then how much
Yep.
are we spending to acquire them as a new client? So that's kind of a 2-parter. And
Hmm.
then the last one is we call it pending because this one's also a 2-parter. I shoved as many things as I could into 5 things.
Just
But
all of it.
we call it,
Yeah.
I know, I just tried to smush it on there, but we call it pending. So pending
Hmm.
days, as in how many days between appointments? How long is it taking your leads to go through your sales cycle, right? You're going to be able to fit more people in if you're getting them in a good amount of time. They're also
Hmm.
more likely to keep the appointment if you have them coming in next week versus 28 days out. So
Yeah.
days, pending days, as well as pending people, like open opportunities. At any given time, an advisor should know how many open opportunities are sitting in front of them right now so they can either chase them, they can market to them, they can get them back on the calendar. And it's also a really good leading indicator of if we need to do more marketing. So
Hmm.
those are the top 5. I know I kind of flew through them, but that is the best place to start for an advisor if they can start getting those metrics overall and then breaking it out by advisor if they're multiple advisor firm, by marketing funnel if they have several marketing funnels going on would be ideal.
Yeah, and I guess one of my, questions that I always get from advisors is like, it's like when I look at things on the financial sides of things, where they are operationally wise in terms of size will really change certain recommendations that we have, right? So like your solo practice owner with very simple expense structure, maybe they don't need maybe they don't need like a fractional CFO, right? Because it's all pretty close at hand. When you
Hmm.
have practices, like where do you think, because these practices grow fast, like a lot of the clients that we have, like they're growing pretty quickly year over year. They're adding teams quickly. They want to grow quickly. Where do you see the threshold of like, okay, when a practice hits X, situation, that's when it's, you really do need to start tracking this kind of data. You can't just be doing napkin math on, I got, a couple new clients this month, like we're good. Where do you see that kind of turning point of where they shift from the operating by the seat of the pants with some of this data to no, you actually do really need this, otherwise the wheels are going to start coming off. Do you notice like a break point that practices hit either by like AUM size or team size or things like that when it really makes sense to be serious about getting this in place?
Hmm. And we see it all the time. And that's a great question. People ask it all the time. Most people start too late.
Yeah.
So, most people think that it's fine and we're good and the cash flow's okay, but I don't really know what's going on in my business. And that hurts to hear that because there's so much more they could have been getting out of it. So it's not an
Yeah.
AUM or assets under management point. What it is lead funnel typically. So if
Hmm.
we are doing more than just referrals and existing clients, if we start expanding into digital, expanding into dinner seminars, expanding into radio, usually radio TV, like the big ticket items are way later. But the second you
Yeah.
start expanding to from when if you don't have every single lead in your head right now, that is the time to track. Like if you're waking up at 2 a.m. and you're like, what happened to John Smith? I thought he was on the calendar, but I don't remember. Like that right there means you're already late because you don't have it all in your mind. And that happens pretty quick. I will
Yeah.
say too, we want from a staffing team position, we don't want the advisor doing it. That is not what they're built for. Like they're salespeople through and through, and they're so good
Yeah.
at it. And we want them to stay in that role. So we do typically recommend if you can have an admin, like if you're at that point where we've hired at least like an admin, part-time admin, or a marketing person, that's also another indicator of it is time. If you're paying staff, they're running leads, or you're wanting them to run leads or help get them in, that's kind of your time to get a system in place.
Yeah, that's great. And I guess in terms of, because thinking about this internally, like with like how my team does it, a lot of it for us early on, I'm all about kind of building out the infrastructure for, okay, where are we going to be in 6 months from now? Where are we going to be a year from now? Have we made our platforms robust enough technology wise that we can see what we need to see? So as we go through this growth progression, we're going to be able to see the whole time. Have you noticed, any gaps or things that you feel like the things that you feel like the things you feel like you say all the time to advisors in terms of how there's the whole methodology of the systems of everything and writing it down, but then you've also got like the technology platform part of it, which has to digest what the systems work is that you've done. It's kind of like
Hmm.
the whiteboarding out of like, okay, here's how things are going to flow through, here's what we're going to track, like here's the statuses. Have you noticed anything when those system pieces go to meet the technology, like any big gaps there that you feel like advisors should know about that, maybe that is not top of mind for them, or, issues when it
Oh,
comes to
that's a
actually baking it into the software? Because some people think like, oh, I'll just buy the software and that'll fix it. And it's like, no, like you have to do so much extra work to really get the software to digest it. Have you noticed any like particular gaps in that, the connection between those two things?
that I've never been asked that question. That's a really, really good question. First of all, because the ones that I see it work well for are the
Mhm.
engineer brain advisors who like process, but
Yeah,
90% of advisors don't. Like they just
no,
want to get the system and have it work. They
yeah,
don't want to be put into the think mode of trying to like figure out how it all works. They're like, let me just go sell. Like I just want to get the leads and I just want to go do that. So um The biggest issue that we typically see is that they aren't aware of their team's process. So they will
Mhm.
come in and try to dictate the order and like the process of how it goes, but they don't know all of the, kind of to your point, like all the underlying stuff that's going into workflow from a marketing standpoint, from a new business standpoint. So they come in, very high level and be like, no, I want this. And it's really easy. Like, it's so easy. All we have to do is this. And the whole team's like, there's 12 steps between what you just described in my
Yeah.
role. And the disservice is it's not allowing the team then to own their role, right? So
Mhm.
it messes with their workflow, and then ultimately the tracking is bad because no one really knows where to put the data. And then the opposite also happens. They build, I've worked with a lot of advisors who end up building some huge, robust, crazy system that they think they have like the Rolls Royce of everything, and then plug
Yeah.
it in, and the advisor ran it, and no one knows how to work it. And I'm like,
Yep.
you should have started so much more simply. So it's both. It's both.
Mhm.
I wouldn't say there's one area specifically. I think the overarching thing that I do see is the advisor thinking they understand the workflow and they don't. And so
Mm.
we typically are saying we need to work with your team. We got to work with the team. We will be their advocate and we will help them because you go do what you're really good at, which is selling and really high level stuff. And the rest of the team is going to be in the weeds. So that'd probably be the number one thing I see is them running it when they shouldn't be.
Okay. Yeah. No, and I feel like I get that same it almost feels like to me that there's two camps of advisor of the very sales focus, like I'm just going to run, 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 and we'll clean up the mess later, versus the
Yes.
engineer type ones, which are like,
Yes.
I am not going to let a single thing come into my like clean workspace until it is perfect. And then everything's going to flow through the system like how I've built it. But it'll be like, I see sometimes with those kinds of advisors, like on the financial side, like they'll have Excel spreadsheets for everything. And it's like they've built this beautiful, Excel environment. But I'm like, I can't even validate any of the data in this because you like set this up from like a non-accounting perspective.
Yes.
Um,
Yep.
so it's like I can't use this because it's not like in the language that we use for financial information. Um, so once, you've got those systems mapped out, worked with the team, the workflow pieces, in terms of like the ongoing ops and just how the organizations are growing, how they're pushing towards goals and things, I'd love to hear more about, what you mean by data storytelling, because it's not a phrase that I hear that often. And it sounds like a concept that I think could be good to elaborate on in terms of what you guys help advisors understand from the data that they're actually getting out of these systems once it's in place.
Just a slight interruption in this conversation. I wanted to bring to your attention two things that are important for you to know. So, we're always at the mercy of social media algorithms. So, if you can subscribe to the show, that would mean a lot to me. Even more to me if you can leave a rating and let me know what you think about it. But we have a new newsletter that's coming out. It's going to be very active in 2025. That is specifically around tax issues that I'm seeing advisors face in their own practices, changes in legislations, and the pieces that I think are critically important for you to stay ahead of as an advisor with the new administration. So nearby, wherever you're interacting with this, will be the link of how to sign up for our newsletter. Also nearby will be the link to my LinkedIn, which is the best way to get in touch with me, learn more about what we're doing for advisors in the tax strategy and compliance work that we do, and also to get access to the various tools and interviews and things that I do, specifically designed to help you improve your practice, improve your own tax situation, etc. So let's get back to the episode, and thanks for tuning in.
Yeah. And I think that's the biggest part that gets missed. So that's why I'm really passionate about it and
Mhm.
passionate about defining it for people. So I was doing data storytelling without knowing that's what it was called for years. Like that's kind of how Track That Advisor started was I was just helping people track data. And then all of a sudden everyone's like, is this normal or what does it mean? I'm like, I don't know. My whole goal is just to help you get the numbers. And so many people kept asking. So then I started really diving into what does it mean? Is this
Mhm.
good or bad? How can I encourage them in this? And then in 2019, read a couple of books on data storytelling, and I'm like, this is what I've been doing. So,
Yeah.
data storytelling is um, basically, like, people think I'm a data analyst. So you can be an analyst and I can look at the data and see what's happening, but then you have to plug in this entire other aspect of communication. So advisors need really good communication. The numbers don't necessarily sell it. Like, they can see something and it can be very, very clear, but they're either stuck in their ways or they don't want to see it or it doesn't really make sense to them. And so they just shut it out and they close the door on it. So my entire job is to take the analyst piece and communicate it in, using credibility and authority with benchmarks and aggregate studies, using emotion. Like, they need to see where this, where it feels, where it hurts, where it feels really good to them to succeed and grow. And also logic, right? I can sit there and say, hey, look, you had 15 leads that you left on the table last year that ended up being a potential of $6 million that you left because of this one error. That makes light bulbs go on, instead of me just saying, you had 10 open opportunities at the end of the year, try to fix that. So data storytelling is mixing all of it together. It's taking me an analyst piece, but then adding like 2 more layers into it. Or you can think of it as consulting, but using data, right? Like, a lot of consultants I know are kind of anecdotal and just encouragers. And it's kind of like, how you feeling? Is it stressful? And to me, I can come in and be like, no, with hard data, this is how I can encourage you to go hit your goals. So that's data storytelling. And I'm glad that you asked, because I don't really know how to explain to people what I do. It's weird, but the advisors need it. And they're intimidated sometimes because they have all these fancy dashboards and they don't know what they mean. And that stinks. Like, I hate that for them. So we definitely pride ourselves in the fact, like, I don't know any other specific data storytellers in the financial advisor industry. You have a lot of analysts, right? Like, we have a lot of platforms that get them good reporting. We have a lot of consultants, but there isn't this blend between all of it together.
Yeah, absolutely. No, and that's such a good combo, because like, one of the questions that I ask a lot of the time, in our tax planning, which is not, it's kind of interesting, the work that we do, because it's a lot of really analytical on the tax side of things. But then, for me, a lot of my methodology around tax planning for advisory firms comes down to strategically harvesting deductions. And basically, when we have a certain amount of discretionary profit in the business, it's like, okay, if we have an extra $100,000 this year, what's the next strategic way to deploy that to grow the business? And so, like, my next native question to them is, where's the bottleneck in the business right now? Because, like, once you get to a certain point in the business, like, it's all problems that dollars can solve, right? It's either you need to make another hire, you don't have information that you need, so you need to hire a consultant. It's all things that ultimately end up being dollar issues. Because if it's time issues for you as the advisor, same thing. It's like, it's actually a dollars issue. It's a resource allocation issue. And so, like, the questions that I'll put back to them is like, okay, well, you've got extra discretionary profit. Where do we want this to go? Like, what's the next strategic expenditure that you need to make in order to accelerate the business? And a lot of the times, like, there's no answer to that. It'll just be, well, I think, it's like, I think we need another this person, or like, we're thinking about doing this marketing thing because it seems like a good idea. And I think what I love so much about what you're doing is that once you've tracked those data points, like those data points that you were talking about, you're finding the choke points in the business of what's stopping the throughput somewhere in the system. That's the limiting factor for it, right? Like, once you've found all of those different choke points, then you can decide, like, okay, the thing that's really holding us back is like this choke point here, which is the fact that we, are getting people through onto the third call, or, whatever it is this choke point. And that if we can increase this by 50%, that's going to make the rest of the flow through the system so much higher. So I think that's the beauty of it. Because, like you were saying, with a lot of things that are principles based, but not actually based on what is specifically going on in the business, can not identify the right choke point. And you can be working on the wrong things, and you're going to be making capacity into something that's not actually the limiting factor in the business.
Totally. And then it messes the whole flow. Like, it messes the whole thing up. And you're so right. And I love your approach to that, because it's so needed, and it also allows them to see that they can, right? Like I'm on the other end saying, you don't need to do more marketing. You have enough leads. You need to go hire whatever. And I'm always met with, well, I don't know, I don't know if we can afford it. And I'm like, well, get your books in order, and then you can see if that can work. They got to have both. I mean, they really need to have both in order to, especially the ones in growth mode, like especially the ones that are trying to just crush it with their goals. So I'm with you in agreement for sure there.
Yeah, in the growth mode, it's like we're flying close to the sun, but if we don't know how close we're flying, we're flying, it gets bad. It gets bad pretty quickly. Yeah. So it's, it's one of those things where if I don't know if I can afford this, like, okay, well, you have a choke point with your finance function isn't mature enough.
Yep.
It's like, that's it. That's the next thing you need to work on. It's like, well, if I don't know if I can hire this person, it's like, well, then you probably need to hire like a fractional CFO. Like that's probably who you need to get there if you don't know that answer, if there's not a plan. But it's a really different style of things. And I think for a lot of advisors, they'll, because especially if they're building the practice from scratch, they start off in the technician role for so long that when you have to switch into being a business owner, being an entrepreneur, it is a completely different skill set than the technical knowledge that got you to the point where you are now, or the client, the ability to manage these client relationships, the ability to make the right portfolio rebalances and have the right tools for different things. Like it's just a very different skill set in a lot of ways. And, the thing that's going to initially enable you to know what calls you need to make is going to be a lot of data analytics and understanding on the financial side what's going on, but then also on like key operating performance metrics, like what's going on with your like conversion rates, what's going on with your average case sizes. Like, are you getting good labor efficiency ratios from your team? Like, is that because of problems on your team? Is that because of you're letting people in the door who you shouldn't be letting in the door as clients? Like but you need data in order to make those calls, because I feel like once you get an organization that's beyond like a 600 to 750 top line revenue, it's just too hard to see. Like you really can't, it's hard to see if you're not tracking certain things in systems. And then especially if you're going to have multiple team members, it's like, how do you track if you're getting good labor efficiency out of them, which, is the biggest expense that you're going to be carrying besides, your tax bill. It's like, it's going to be the labor. And if things aren't moving through the system well, like it's, how are you going to know? I guess one other thing that I was interested in hitting today was talking about the difference between exploratory versus explanatory data. If you can highlight that a little bit, like what the difference is between those two and what advisors should know about that.
Yeah, so that's a big part of data storytelling. And it comes into play with advisors, and a lot of them don't know it. It's just defining what they're kind of already doing, or where they're lacking. And it's probably very similar to you. I see so many similarities, even in you talking. I'm like, oh my goodness, we had to see so many of the same things. So with like dashboards. Okay. So even your advisors, they get a P&L or a balance sheet or whatever it is, or my advisors get a dashboard, and looking at it once a month is exploratory. So great. Like they can see what, for our case, right? You can see maybe what a stick rate is. You can see how much business you wrote. You can see what's pending. You can see your close rates. And that's good. Like that's a great first step, but most people end there. Like you send them a P&L, you send them a balance sheet, and they take a peek and they're like, oh, cool, I made X amount of profit this month. And like that's great. That's it. But there's like zero movement. And what my calling in this world is to get them move past the exploratory phase of explaining it. And for a while, you need someone else to do that, which would be which would be me, to stand in that gap and say, okay, you can look at it all day long, but most of you walk away and it doesn't affect your day to day. It doesn't inspire dreaming. It doesn't inspire movement. It doesn't inspire you to have different goals. That's the goal of the explanatory stage. So explanatory is looking at all those exact same numbers that they're getting monthly and telling them exactly what it means. Not only kind of the story that was involved and how they got there, but also how does this apply to where you're trying to go? To your point, like the bottleneck or the choke positions of like, okay, you might not feel this on the day to day, and it might look like your close rate is fine, but did you know you have one advisor who cannot close seminar leads at all, but your company has so many referrals that it hides in the close rate? Those are things they're not seeing, right? They just see a 30% close rate and they're like, we're fine, we're hitting benchmark. But when you break it down and I show them the only reason why it's a 30% is because you have all these other referrals skewing everything else higher. Like it's hiding within there.
Yeah.
That's the explanatory side, right? Like that's really helping them see kind of pearls of wisdom that's coming out of it, because data speaks. Like it's actually very loud if you're in it and you're doing it all day long. Like I can look at a dashboard of one of our clients. Sure, you can at the P&L, like immediately know trigger points, know what's going on, know what the questions I need to ask. And I really want to teach advisors to do that for themselves. Some of them, to your point, are flying so close to the sun that they don't have time, and that's fine. And I will continue to do it. But it's easy once we force them to sit down and force them to look at it and force them to engage. So that's kind of the difference. Like most people are in exploratory mode. Most people just peek at it, look at it. Thanks for the report. They don't take that secondary step of, okay, do I know what this means? Do I know what it's saying? And could I actually communicate that to my team?
Or just like, what do I actually do with this, right? Like, how do I change the behaviors that we're currently doing? Do I need to change the behaviors that we're doing? Like, do I need to start something? Do I need to stop something? Do I need to have a hard conversation with somebody? Like, I find the same thing with on the financial side all the time. Like I had this conversation a couple days ago with an advisor who was he's getting towards growth mode, but like he was doing $1 million top line a year. And we were talking about record keeping because that's part of our assessment process, is to look at all that. And, he's like, oh, well, I keep a QuickBooks, but it's just because my CPA wants me to. It's annoying. If I didn't have to do it, I wouldn't do it. And I'm like, how are you making decisions? Like, how do you know how profitable, like, how do you know what you're doing? Like if you're not, there's no analysis going on off of this at all whatsoever. And then at the same time, I'll see, with your point earlier with the, advisors really shouldn't be doing this stuff themselves, like hand keying stuff into, like the systems and things. Like it's a waste of their time. And I think like with your explanation, like on the financial side, what I experience a lot, I tell people it's like the difference between like preparing Thanksgiving dinner versus like just sitting down to Thanksgiving dinner and spending that same amount of time, right? Like if you're dealing with data that somebody else has produced, and so like your experience with it is more just on the consumption side, like initially that exploratory side, but preferably that, the actual storytelling part of it, until you're up to that point where you start to understand your own data enough and your own organization, like how your organization is interfacing with the systems that are producing the information so you can actually interpret it. Like most people, like when you cook Thanksgiving dinner, like you don't even want to sit down and eat it when you're done, because you've just been smelling it for like 4 hours. And it's the same thing, I think, for a lot of the advisors I encounter. Like if they prepare their own QuickBooks and do their own bookkeeping, there's no way they're actually going to look at those reports that are getting produced out of that and then take a look at them. And then even the next step of okay, well, what behaviors do I need to change in order to get this better? Like they see it as just purely a compliance thing rather than, no, this is like the language your business is communicating back to you for you to actually understand what's going on. Like that's the whole initial point of these things, is to be able to see and say, okay, like for me, like I'm looking at different P&Ls all day long for different companies. And so it's gotten to the point, like for someone like me, where it's like, I look at a P&L and I look at it before I talk to the advisor and before we have that conversation. Like I already know a lot of stuff that's going on in the business and like what the issues are, because I can just see it in the financial information. Like it's just there. And comparing them with other practices that are of the same size, or, oh, wow, that payroll rate is really high to that revenue. Like what's going on here? Like, did they just onboard a bunch of juniors? Like, did they just have a pricing issue? Like, what is this? I think for you, it's probably a similar thing. And I think maybe for a lot of advisors, they don't realize that you don't have to cook the Thanksgiving dinner. Like you probably don't want to, right? Like if you only have so much mental energy for these kinds of activities, then saving it for the okay, somebody's already digested this, and like, this is actually what I need to be paying attention to. Here are the problems here. Okay, let me spend my mental energy with this on making decisions about behavioral changes that need to happen, or,
Yeah. That's
making the
such a
next
good
call.
analogy. I might take
Yeah,
it. I like
go for
that
it.
a lot
You can
because it
have
is
it.
true. You spend all this time cooking, you spend all this time doing it, and then you're like, I'm so sick of
You're
it.
so sick
And
of
I know
it.
they feel that way. And the other thing too that I will add, they b- I think sometimes they are almost embarrassed or feel like they should know more than they do because they're in the
Yeah,
financial space. Like we're in a very
yes,
interesting industry because
it's
it's
so true.
financial and
Yeah,
they are relied upon by their clients to do this. And I always want to help them feel not negative about that. Like you
yeah,
need to be curious about it, but I think a lot of them feel like they have to have it figured out or they should have it figured out, and so they don't want
yeah,
to admit that they don't because of the space we're in. Like it's just an interesting dynamic there. And so if you're an advisor listening, do not feel ashamed or embarrassed. Like that's very, very normal to not have a good grasp on
yeah,
your financials or to not have a good
yeah.
grasp
It's
on
very
your
true.
ops and tracking. So it's very common. So just wanted to throw
I
that part in
know
there.
that's absolutely true. Like the number of times I have advisors apologize to me for not being an accountant.
Yes.
And I'm like, you
Yeah.
didn't, I had to go to college for this. Like it was a whole big thing. We had to do all this test. Like I've had to spend a career on this. It's like,
Yeah.
you
People
shouldn't be
all
an
the time are like,
expert in
I'm
this.
sorry to ask this question. Like, I'm embarrassed to ask this. And I'm like, don't,
Yeah.
I've done this for, 15 years. Like, hopefully you can come to me with these questions. And so,
Yeah.
yes.
No. And I think it really comes down to knowing, I think with a lot of the advisors, it's the like knowing yourself, like knowing how you're wired, and then leaning into those strengths super hard, and then
Hmm.
finding other people to fill out everything else. Because
Fill
if you're
gaps.
like awesome on doing seminars and presentations and doing education and do public speaking, like lean into that super hard, lean into the rainmaking super hard, and then just let that provide for the rest of this infrastructure to be built out underneath you, and don't feel like you need to be a master of everything, because you're just not going to have the focus to actually make progress, which is something that I've seen happen in a lot of practices. Like when I look at the different practices that we work with, or people come in and having conversations about their practices and things, like I can tell the difference between advisors who have that mentality of that, like, I'm awesome at X, Y, and Z. Like I'm really good at mentoring my team. I'm really good at client conversations and making sure that, like, in our process, like the scripting of the way that these meetings are going is great. And I'm really great at, public speaking. Awesome. Then that's what you need to lean into. I have other advisors where they just will try to do everything and try to be the best at everything, and it ends up slowing them down a lot. And I'll see like the
Totally.
difference in performance in the firms because of the ones that are just like, no, I'm just going to stick on this, versus I want to make sure the people who want to make sure that they completely understand everything that's going on, and so they're going to DIY everything, and it
Yep.
just slows them down.
It does.
So for people who are interested in learning more about your company, the work that you guys do, data storytelling, what's the best way for them to get into your world, Erica?
Two ways. Our website is trackthatadvisor.com. We are actually working right now on getting like a massive resource library up and running this year for people. Just tons of articles, tons of podcasts. I mean, just lots of information. One of our core values is to teach, and then number two is to
Mhm.
be a resource. So we're really working on getting that out for the masses this year. So that's a great place to learn more. There's videos about what we do in our platform, and then me on LinkedIn. I don't do it as often as I should. Our CEO gets me in trouble, but I am trying to get like videos and content out for the masses weekly, just so that people can come there and learn little tidbits of information. So those would be probably the two. Follow me on LinkedIn, Erica Pauly, and then trackthatadvisor.com.
Awesome. Any last thoughts or things we didn't hit today that you want to share with advisors who are listening?
Probably the last thing, just remember that it's a journey. It is not a final
Yeah.
destination. It's always gonna keep going. You're always gonna have changes. You're never gonna arrive. I don't mean that to sound negative. It should be encouraging that no one has arrived, and uh keep trekking on. Track That Advisor has its name for a reason. And
Mhm.
I always want to just encourage people that it's lots of turns and twists, and there's lots of false summits, but it is a journey. So embrace it.
Yeah, I love that. I love that. That's really good feedback. I always think of it as like, it's like being a classic car hobbyist. It's like you're never done. Like you're just never
Yeah.
done. Like there's always another like, well, we should change this paint color. Like, or let's get the authentic tires on this
Yeah.
thing. It's like if you treat it your business like that, where it's, we're going to be tinkering away at this thing, as it continues to
Hmm.
grow and change. Like you're never done. But
Yeah.
that's great.
And that's a true calling. Like most of these, that's my
Yeah.
favorite part about them is it is their calling in life.
Yeah.
And so
Yep.
it's enjoyable to them and it should be, and it shouldn't ever feel like it needs to end. So yeah,
Yeah.
we're there to help you and I both.
Nice. Great. Well, thank you so much for coming on the show today,
Thank you
Erica.
for
I really
having me.
appreciate it. And for those of you listening, we'll post the links nearby to Erica's LinkedIn and then also the Track That Advisor website so you can check out their resource library because I'm sure by the time our episode goes live today, they'll have a lot of really cool stuff up there for you to check out. So thanks again. And
Thanks
this
so
was
much,
another
Catherine.
episode. Yeah, this is another episode of the Financial Advisors Want to Know podcast.